So yeah, we're going to have a look at it follows on really well from the previous speaker. We're looking at the enterprise adoption of blockchain applications and the way in which they're used in the wider market. So moving away from the typical sort of cryptocurrency space and those areas where we've looked at with ICOs and things, how we're actually using blockchain in the real world to create solutions, like, as we said, the art solution that was in the previous speaker's presentation. Just so you know who I am, I'm a lawyer for 30 years in the space of payments, and that moved into cryptocurrency and blockchain innovation. I'm on the board of about 15 different companies, including a couple in the blockchain space, and I'm now running a payments company. But most fun of what I do at the moment is a podcast, which is available on iTunes amongst others, called Fintech Unplugged, and we've just released one now on crypto and blockchain that's come out today to coincide with this conference. So Fintech Unplugged, have a look at it, listen to it, sorry, when you can. So I've got two very different speakers today in the panel. One is a company that specializes in designing blockchains for other people, and the other is one that's actually been developing their own specialized blockchain over the last few years in a very, very niche market of credit scoring. And so I want to ask them both a few questions about who they are, and then we'll have a deep dive into some of the reasons why blockchain is necessary for what they're doing. So Adi, do you want to just a couple of words about you and your company?
Yeah, so my name is Adi Ben-Ari. I'm the founder and CEO of a company called Applied Blockchain. We've been around about 3.5 years now, based in London, and we're a team of 30 people. We've built around 30 different blockchain solutions now to date. Our clients have been a 50-50 split between startups and corporates. And we've worked with some of the biggest corporates across a range of industries. So we've done some work in banking, aviation, automotive, shipping, telecoms, to name a few. So there's some common threads which I'll take you through, but in general, that's what we do. We've also developed some product which really covers some of the common things we've been doing across all those solutions.
Great. And Bulent, can you tell us a bit about you and your company before we kick off?
Colendi is a decentralized credit scoring and microcredit protocol, which I'm the founder as Bulent. I'm in the fintech industry for the last 2 decades. My last company was a transactional banking e-money company, and we sold it to a French group. We had 2.5 million active users, but I know how hard it is to play in the fintech area with regulations, with barriers, a lot of stuff that you also mentioned about the lawyer part. So for the last 2.5 years, we are based in Istanbul as development. The company is established in Switzerland, Zug, and we are developing a lot of good stuff for the big names at the moment.
So to kick off, tell me why blockchain? Why would blockchain work with credit scoring when a centralized database? We've got Experian, we've got Equifax, we've got loads of players, Reuters, Thomson, they all do this stuff. Why would we want to go to you with your blockchain?
The thing is, I guess we all believe in distributed ledger technology by means of trust, and single point of failures like hackings that we saw a lot of in the last decade are like daily usual events. And what we believe is like the trust as the data that I own only belongs to me, and I need to share it with my consent to whom I need to share. So this was the idea when we first found the company's milestones, and when we put the milestones, the blockchain was the perfect solution for our usage by means of the trust, the data that you store. You can use it only your private key. So it's like the core of it is because of the trust that we believe in.
And why would anyone want to trust your credit score as opposed to an Experian credit score?
That, I believe, is the most sophisticated part, because we are working for the last 2.5 years just for getting that algorithm running work smoothly. And in emerging markets, we don't use credit scoring bureaus, and they only use financial data for your credit scoring, and that I don't think that today is the case, because you own a lot of data through your mobile phone, that where you live, who do you contact, or whatever you do is stored in your mobile phone at the end of the day. And if there is something that trustworthiness or that creditworthiness can be scored through your daily life, for example, I have an 18-year-old girl, I believe that she will never go to a bank branch office. but she uses it daily a lot of times, like a lot of digital bank platforms. So I believe this is going to be the next big thing for most of the fintech ecosystem partners, because we believe that credit is like a loyalty to everyone. And when you have a borrower, lender, or merchant kind of personas, you don't need a middleman to assess your data, your score. And if there's a way to create that through your personal information without giving it, it's a good thing.
So, I mean, the first question that always comes to mind when you're looking as a lawyer at personal data is the new General Data Protection Directive regulation that's coming across the whole of Europe. How does your solution protect personal data and comply?
Colendi doesn't store anything at the end of the day. Colendi has a very solid algorithm that works on your mobile phone or in the blockchain. Like, we have a lot of partners at the moment. The scalability are the problem at the moment. Like, lots of Ethereum scalability problems that we see at the moment. We have a couple of great partners like Enigma, like BigChainDB, or a lot of other guys. We are trying to crack that part, but then, as a matter of fact, the GDPR compliance is our most competitive way, because we do not store your data in our servers, and there won't be a Cambridge Analytica kind of big issues in our environment. You own your data, and you give your data if you want to share with anyone in the ecosystem as a borrower or lender or merchant. So we try to be very focused on GDPR compliance.
So on the blockchain itself, all you're storing is a score?
Yep.
And it can only be disclosed by the user, the data user?
By the consent of the user, yeah, with their private key.
Okay, that's interesting. I mean, it's always interesting to see new applications of blockchain in places where there is a value, and GDPR is causing a lot of issues in the banking sector as well as others, I think. I think it's great that you're creating something that's going to work alongside that. So Adi, we've seen one use case. You've seen over 30 by the sound of it. Go back through some of those industries and let's deep dive a little bit into some of the projects.
I think initially we worked with some banks.
Yeah.
And then and that was mainly around proof of concepts. Then we found ourselves working with the bank's customers. So corporates.
Yeah.
That were really looking to do things independently, really.
And what sort of verticals were you seeing them coming into?
So we found it was really around high value assets in complex supply chains.
So what sort of asset would we talk about?
And this is really, I guess you could see our company as a kind of mini survey of where other companies are spending their money on blockchain.
Yeah.
And so initially it was aviation. So we've been working with CETA and KLM on the components, aircraft component supply chain.
And why is it important that you would want to have that on a distributed ledger rather than a centralized ledger? You'd think a centralized ledger would be good for an airline.
Yeah, there's a few things. So the way we look at blockchain is really a database that has group security.
Okay.
So instead of one company effectively securing a database, you now have a database where a number of different parties contribute to its security, right? So it's harder to break, and those companies each have a stake in that security, essentially, in that system. So they feel, from a technical perspective, it's a safer place for them to do things together.
Okay.
Right, or to have things between them.
So typically, who would be the nodes in something like that?
It really needs to be a group of parties that are unlikely to collude to undermine the system. That's really what it comes down to. It's their propensity to collude, to break.
So everyone has to have a benefit in the system not being broken.
Yes, and it's it's really a political thing, an economic thing. It's what's the propensity to collude to undermine it, and it doesn't matter whether it's 1,000 or 10. If those 1,000 are very easily bribed and could be on what their stake or
so there has to be an independent reason why each of the nodes wants to keep its integrity.
Correct. That's what gives it the integrity.
And the other, you said automotives. Why would an automotive company want to have a blockchain?
So what we're seeing, and this ties back a little bit to what Jesse presented earlier on art, is we're seeing these supply chains where companies are, let's say they're bringing together suppliers and they're assembling a product, and so that product has a life including its components before it's assembled and sold as a product, and then after it's sold.
Okay.
And there are different parties that have an interest in what goes on throughout that product life cycle. But today, they each have very limited views of that. So someone buying a product, for example, would not have much view of what the components are that go in. Or after the product, let's say a manufactured car leaves the factory, it's now driven, it does certain mileage, certain parts are changed and wear and tear and so on, and no one really has much visibility of all of this. And in aircraft, you've actually got the added problem of safety. So KLM has a big business in parts maintenance. And they see the parts when they come into them, and they see the parts when they go out, and everything happens in between those 2 points. But they don't really see much of what happens to the parts outside of that. And so there's added value to safety if they could find a way to collaborate with the other companies where the part moves through, so let's say the other airlines and other parts of the industry, in a way that they could trust the data, but they wouldn't be revealing commercially sensitive data to each other. And that's really the paradigm that we're trying to reach with this technology.
And so when we're looking at that, so if I was a new company coming to you,
yep.
what would be a typical process? I mean, would you turn anyone away, or would you just say, oh, you want a blockchain, I'll build you a blockchain?
No, so first of all, just to finish off on the supply chain piece, what we find is that all of that history, knowing that history or being able to prove it, allows you to understand the value of the asset itself. So if it's a car or a plane or a ship, if you know what it's been through, if you know the parts that are in it and what's been changed and so on, you can assess the value better, and that drives financing for that part, purchasing of the part, insuring the part, and so on.
So it's almost like the provenance you was talking about on the
artwork.
artwork.
It's exactly that in supply chains, right? So really all the activity that happens around and all the different parties that engage in that asset get more from and reduce their risk by having a more solid base of the data.
You've got the provenance of, of every part of the car.
Exactly. So we're engaged by generally parties where there's a high value parts. Or let's say in the energy industry of Shell, where we're talking about high value transactions. So where the value is so high that a mistake or not knowing, not having true provenance, or somebody changing some history, perhaps defrauding it, would have a big financial impact, then it's worth spending some money on some technology to harden that.
So again, that's where the immutability comes in.
Correct.
And again, I guess that's the same with your product on credit scoring. You want that immutability. You don't want someone tweaking their credit score so they can get credit where they shouldn't be getting it.
That's, I guess, one of the biggest, most important issues that we need to.
And how do you stop that? I mean, I like the fact that one of your USPs is that you can go into nascent markets, so the emerging markets, where we haven't got the experience of this world in there already. You're not going to go and compete with them in Europe or in America, but if you go to Africa or places like that, you've got a more nascent market.
The thing is, there's a huge market by means of unbanked, underbanked people. We're talking about 2.5 billion people who doesn't have a bank account or any banking transaction at the moment. And we are talking about Indonesia, India, Malaysia, Pakistan, to all the Middle East, all the Latin America. And this is a big market that needs attention. They don't have enough kind of GDP or enough, they don't have the enough capacity to be invested in. So we need to find a solution for them, for their transactional banking solutions, their microcredit solutions, and their credit worthiness solution. There are lots of credit bureaus all over the world, but in the emerging markets, when we talk about, for example, India, there's only 50 million people scored or have a credit card with a credit history. So when you put this 5C rule set, like the character, capacity, collateral, conditions, kind of all the dynamics of this 5C, we believe that there is a potential that with the help of technology, which is like for the last 10 years, we have this mobile thing in our hand, which creates enormous amount of data, that today most of the big companies are sucking this data to create value over it. We believe that you can own your data. Through that, you can definitely have an emerging market solution for these guys. And as far as I know, a lot of big companies are investing in this part, and we already signed a lot of big names in the process. And I'm pretty sure that Adi has Shell as an investor, so as means of big names in investing in this ecosystem, is a huge thing to have.
That's brilliant. And so going back to my other question, Adi, which was so you've got someone like Shell, yeah, and they've come to you. Are you going to turn them away, number one, or are you going to say that doesn't need a blockchain? Or what would your initial process be? How would you sort of bring them in and talk about the product?
So first of all, I've got a technical background. I'm a techie, and really I came to this space seeing some new technology and trying to gain a deep understanding of what that does that's different to everything that we had before. And that's the way we approach the client project as well. So most of the things that are presented to us, and we'll go through this with clients, all sorts of use cases where they have pain, and it might be in things that they're doing with their partners and counterparts as well. Digitizing the solution might be enough. And actually, there's some pain that comes with blockchain, and there's some extra cost and inefficiencies, and it might not be, you know, there might be very little value gained from actually using blockchain to solve that particular problem. So it's only suited to certain types of problems, and it has extra cost associated with it. And we just at the basic level think that you're replicating where you're storing the data, if you're storing data on the blockchain. So instead of paying for it to be stored once, you're now paying for it to be stored 100 times.
So why is that a good idea?
Because it adds security. And if you need that security because the cost of an incident, of something going wrong is so high, or it's worth reducing that risk through that extra cost, then it's worth it.
So this is something I've always been confused about, and you as a techie might be able to. So how is it more secure to store data on 100 nodes than it is to store it on one node and protect that in an underground bunker with bombs, alarms, anything around it to stop anyone going near it? If I've got it on 100 nodes, surely I could just pick any one of those 100 and hack it.
So first of all, one thing to understand about blockchain, it doesn't secure access to the data. It secures the ability to change the history, right? So it protects from changing that history. It doesn't say someone can, accessing the data is about encrypting it, and that's really different to blockchain. Now that bunker that you described, you could have 100, those 100 copies could be stored in bunkers, and then I would argue that now that's more secure than just one copy in one bunker.
But when we were talking earlier as well, you were saying that effectively it's only the output that's stored in the ledger anyway. The content, the smart contract is all encrypted within the block, so it's not all out there in the ether.
So the things that I think need to be stored on a ledger are some sort of something that's indicating the party that's a signature. So proof of who's provided the data or who's party to it. Representation of ownership of the asset itself, and a token, and a token of payment, if there is a token of payment. So those are really the three things that we see going on chain. Now, when you put an asset on chain, it might just be that you have a token that represents that asset, and all the metadata or description of the asset sits off-chain.
Still offline.
Yes. And then the smart contract is really the rules about when can those assets and tokens be moved, or maybe some restrictions about when they can be moved and so on. So maybe we need some agreements in place before an asset can be moved one way and a payment token can be moved another way. That's what the smart contracts do.
And then on the back of that, you again create this provenance we've been talking about all the way through. So for when that asset needs to be sold on to another third party, you've already got the provenance and you know where it's been from before.
Correct.
So it's giving you that whole layer after layer.
Yes. So if that adds value in an ecosystem, then I would say yes, have a look at using blockchain.
And how do things like the Internet of Things merge into this type of area? Where would you see some interaction between Internet of Things and blockchain?
Yeah, so when we talk about provenance of let's say physical assets or physical products, then we really want to know about the history of those products, of those physical things. And that history might come from people maybe providing agreements or providing proof or providing some input. But actually more and more we're seeing input about things coming from devices. So we might have sensors. We talked about the aircraft, for example. There might be a sensor on the aircraft saying this component has just been scanned and come in. And so this is now a component that I have on board. And it's the aircraft sensor saying that, and we could essentially use that scanner as a device to sign that data on chain so that whoever's then looking at that has proof that humans can't change,
Yeah.
It will be very, very difficult to defraud. And you've got direct machine provided data or scanner provided data, sensor provided data driving or feeding into the provenance.
So automated machines creating the data that is then made solid in the blockchain, so it's immutable then going forward.
Correct. Let's say you had a container with some perishable goods and you needed to maintain them at the same temperature. You might want some sensor readings to prove that the temperature hasn't gone down and therefore the value of the asset has remained where it is.
So finally, we've got 2 seconds left, 1 second left. Final comments from both of you. Sorry, I mistimed the ending there, but well, any final comments on maybe the future of application of blockchain technology? Do you see any?
I think we are still in the very early days of the technology. We need a long-term vision, long-term play, and long-term teams to play this game. And I believe that there are lots of great things that are coming up.
Adi?
I would say, and this might be a bit controversial here, don't assume that you necessarily need crypto to do all the things that I've described, which are the things that give you value from blockchain technology. So there are lots of different things going on here, and actually to get the efficiencies, you might need a payment token, but does it need to be a crypto payment token?
Could be a fiat one.
It could be a fiat one. So don't assume that crypto is the only way of solving it. Crypto brings a lot of things to the table, and also brings a lot of challenges to the table. And it's the same is true the other way around with, let's say, a fiat token. So it's, you have to look really intelligently at the whole picture.
Thank you very much to my two panelists. Please show your appreciation.